Hello and welcome to a brand new episode of Smart Money. The big headline in the last 1 week was market regulator SEBI looking to clamp down on Finfluencer collaborations with regulated entities. SEBI in a consultation paper proposed that regulated intermediaries should disassociate themselves from unregistered financial influencers. Before we take up this conversation forward, my colleague Yash is here with us in the studio to explain what exactly does the SEBI's draft consultation paper on Finfluencers talk about and what the implications could be. Yash, over to you.
Well, Sonia, while scrolling, let's say Instagram, YouTube or any other social media platforms, how often have you come across videos either recommending stocks, mutual funds, IPOs or any other financial services products? The problem is more often than not, these recommendations come from unregistered entities or as they are popularly called, Finfluencers. SEBI has released its consultation paper on the association between registered entities and these unregistered Finfluencers. Public comments have been sought on this consultation paper by September 15th. Now, the objective is very simple: reducing the association between SEBI-registered and unregistered Finfluencers, and by doing that, disrupt the revenue model for these unregistered Finfluencers. First, let's look at the ways in which these unregistered influencers benefit. This can be through various ways, like referral fee for usage of the product, platform or services. There can be non-cash benefits like free usage of products or services, or compensation received from the social media platform itself, or even by profit sharing with the product channel or the service. SEBI in its consultation paper has said that no SEBI registered entity will have association with unregistered Finfluencers. This covers all monetary as well as non-monetary association, all agents and representatives of the registered entities, and all promotions of products and services. SEBI has also said that no registered entities shall share any sort of client information with any unregistered Finfluencer. Also, SEBI registered entities shall not pay any sort of referral fees based on trailing commission basis. There are recommendations for registered Finfluencers as well, like display of registration, contact details, investor grievance helpline, and all appropriate disclosure. Now, let's talk about the misses, which will be a bigger challenge to my understanding for SEBI. SEBI's consultation paper does not say anything, let's say, on unregistered influencers promoting financial content for their own benefit. Also, does not say anything on Finfluencers promoting financial content on behalf of another unregulated entity. Let's hope that these misses also get addressed in times to come.
Okay, Yash, thanks a lot for that. Let's now connect with our guests today. We speak to Vivek Bajaj of StockEdge, and Anushka Rathod, a finance content creator, joins in as well. She has over 1 million followers on social media. So let's find out, what is kind of the best way to approach this, and what is a workable solution in order to let both industries thrive. So let's try and get into the depths of it. Vivek, let me start with you first, right? There is so much debate that's happened about this, but let's first try and assess the influencer market. How big is the market currently? What is the kind of business potential? And what's your best guess on how things may shape up?
I think influencer marketing has become a very important part of the global business growth. And if you see the numbers, which is highlighted on the screen as well, not just in India, but globally, it has reached an absolutely amazing numbers. And last 5 years has seen more and more growth of influencers coming to the system and leading to value addition to the businesses who have appointed them to market them. Now, in India, talking about BFSI, the overall pie, if you see, almost 10% of influencer marketing is attributable to BFSI and the finance sector. So I think from a future perspective, this is a very important platform for companies to come and showcase their product and services. So we cannot deny their role and existence. But definitely, financial market is a very different kind of a platform where it is all about money, which is involved. So having a regulated framework for financial market influencer will actually cool down a lot of irregular practices which is happening in the industry right now.
Okay, so cooling off of irregular practices, I think, is the is the main intention that SEBI has, right? Fair enough. Anushka Rathod is also with us. Anushka, you have over 1 million followers across social media platforms, and you do understand that with great reach comes great power, and with great power comes great responsibility, right? And I think what SEBI is trying to do is to ensure that this power that you folks have is used responsibly. But what are your thoughts on what the consultation paper has suggested?
I think as, Finfluencers, and especially the Finfluencers that I am around, we all really welcome the consultation paper that is there and the guidelines that have been suggested. Because today what is happening is that there are a lot of creators on social media platforms who are giving direct advice, who are showing their own portfolios and influencing people or nudging people to take specific positions or invest in specific products, and in some cases even taking money to promote something and not disclosing it. And those products may not always be in the best interest of their audience. So today what is happening is that all of us are being, clubbed together and put in the same basket of influencers. But if you go and you see our content, from day one, we've not been, even talking about stocks. We are not talking about specific mutual funds. We're not asking people to invest in specific products. Ours is a more general education-based content, and we are creating content on personal finance. We are not stock market creators. So the entire consultation paper that's come, and us not being allowed to work with SEBI registered platforms, that already didn't happen for us because we didn't make that kind of content. So this is actually, SEBI has got it bang on. This is going to stop the unscrupulous activities that were happening. This is going to stop, all the misleading that was happening for the retail audience. And we definitely welcome this because this will help us segregate, the kind of creators we are from, the broader market where they're sharing screenshots and misleading people.
Absolutely, absolutely. I take your point. Vivek, come in on this. What exactly has SEBI proposed, since the market is growing at a really fast pace, right? And as Anushka was also pointing out, you can't paint everyone with the same brush. There are people who are doing a lot of good things in terms of personal finance, investor education, promoting financial literacy. And this over-regulation may sort of just work against this, right? Your thoughts?
Well, SEBI is not asking not to continue doing that. If you are promoting financial literacy, if you're educating people, sure, you can very well do that. What concern SEBI has is a regulated entity is having a commercial relationship with these influencers, and those commercial relationship is not defined as per the spirit of the law. Please try to understand. I'll give you a case example that any influencer who is showing a profit screenshot on a social media platform and making other people believe that the person is profitable, and then giving a lead link to open an account with a broker, and then people open an account with a broker and there is a revenue sharing which is happening with that influencer. Now, technically, there is no law defining this. But yes, there was a law, which was a sub-broker law or authorized person law, which clearly mentioned that if you want to do a brokerage revenue sharing with any broker, you need to become an authorized person, and you can only tag yourself to only one broker. So there was a gray area, and some people have taken, misutilized this gray area by becoming affiliate of multiple brokers. So what SEBI is saying that if you want to make trail income or brokerage income from a broker, you become the authorized person of that broker and then promote that broker. No one is stopping you to educate. No one is stopping you to earn brokerage earning. What SEBI is saying, there was no law, there was no framework. Now we want to design a framework. Sonia, you also know that when things go out of hand, frameworks design becomes much more complicated. And this is exactly what is going to happen here. That because the framework was not done earlier, now everything is looking so bad that SEBI want to go to an extreme level of, controlling them or disconnecting them totally from the financial ecosystem. That, I think, is probably slightly overgone.
Oh, absolutely. I mean, okay, I take your point on this trail-based commission or recurring income, right, that SEBI is sort of trying to control. And this is in order to prevent fraudulent practices and to not there are innocent investors who become very gullible with a lot of these advertisements, etc. But Anushka, come in on this, the fact that unregulated entities like Finfluencers may not be allowed to work with regulated entities, does that disrupt your business or your model in any way?
So coming back to, what I mentioned before also, there are different buckets of creators of influencers. There are stock market based creators and there are personal finance creators. I lie in the personal finance creator category, and I've worked with, say, probably 100 brands today. And out of that, over the last 3 years, probably 3 or 4 of them were SEBI registered. From day one, like when we started making content, I was clear that I do not want to talk about specific mutual funds or stocks. It was very easy to do it. It's not very difficult to take names of 5 stocks because that gets the most amount of views also. But from day one, I was sure that I didn't want to take that path and I wanted to focus on general education. Of course, I got a lot of nudges from, people in the industry to talk about those things, get those affiliate income. But I understood at, some level, this was not correct. And it's also something that I didn't want to pursue. So today for our business models, especially personal finance creators, this probably, affects our business model or like our revenue, I would say, of around, say, 3 to 4% on an annual basis, but nothing more than that because we've been self-regulating from day one. But then when it comes to stock market creators, especially a lot of majority of them are from YouTube, they have been talking about specific stocks, even though they're not recommending, they are showing their own personal portfolios. And when people see that they've invested lakhs and lakhs of rupees, they get incentivized to invest. Sometimes the screenshots or the images that they're showing, they might not be 100% correct. So in these cases where, now that SEBI said that they can't earn affiliate income, their revenue sources become less. In fact, there have been some numbers which I've heard from people talking in the industry only that there are individual creators who are earning 6, 7, 8 crores monthly just from these affiliate incomes. So this regulation and ensuring that, the consultation paper, what it discusses that they can't affiliate with SEBI registered entities will actually affect their business model, but it is in the benefit of the retail investors and it will affect them or it will incentivize them or not incentivize, actually mandate them to create content or to be more retail investor friendly or, keep their interest in mind.
Okay. Since you spoke about how you've worked with so many brands, right? I mean, 50, 100 brands over the course of the last 3-4 years, how much ever you've been doing content, where do you see the scope for this industry? I mean, the personal finance content creation space has become huge. It's blown up in the last 1 to 2 years. What kind of growth, what kind of opportunity do you see here?
Right. So I think one major shift that has happened is that over the past 2-3 years, we initially started with a lot of startups that were coming to advertise, but now even traditional finance has seen the scope of this industry and, that we have our audience's attention and they can also use our platform to advertise. So personal finance, I don't think it's going to, get hampered because of this consultation paper. And we work with a lot of utility-based companies, utility-based fintech companies, traditional banks. We work with platforms which generally just want to create awareness. These are arms, of, again, banks or insurance companies or credit card companies. So all that is, actually increasing. And I have, in the last 3-4 months, my portfolio initially, or, my brand portfolio was somewhere around 20% traditional finance and 80% startups. But that has now changed to 80% traditional finance companies and 20% startups. So I think the market has grown deeper. More players have come into it and more traditional credible players are coming into it. So I think we are here for the long run. This industry is here.
That says a lot, right, Vivek? I mean, folks like Anushka and a whole host of others, right? They have a captive audience and traditional brands are also noticing that. Brick and mortar brands, not just e-commerce platforms or not just startups, right? So you can't sort of just wish this away. Even if SEBI tries, this is a growing market that will sort of benefit everybody. Do you think this consultation paper will solve all the problems? Do you think there is some middle ground that can be achieved perhaps?
By saying that, Sonia, I think we are presuming that it's an extreme step which SEBI has taken. But obviously, it's a strict measures they have proposed in this, and it's a consulting paper. So all of us have to give inputs so that the paper, the final regulation becomes much more moderated. My humble suggestion to all the content creator is that there is no harm in taking registration. I mean, it will only increase your credibility. It will only increase the scope of your business. You can do a lot of things because finally content is getting commoditized. monetization from the content is becoming difficult day by day because India has more than 2-3 million content creators these days, right? And every week we have one new content creator coming in this particular domain of finance. So my humble submission is that take a registration, become an RA, become a maybe AMFI registered intermediary, and follow certain compliance rules and work with all the intermediaries. That's what SEBI is saying, that become a registered intermediary and do whatever you want to do.
Okay, this question is for Anushka. Anushka, this SEBI clampdown is more for finfluencers who are using their platform to get trail-based and referral incomes, right? But do you think a different set of regulations is needed for finfluencers like yourself, where your business model is largely dealing with brands in the field of, say, personal finance and investor education?
Definitely. And it's not that we've not considered getting the existing registrations that are there, but we don't want to give direct advice which these registrations are made for, and these registrations don't work for our business models. We want to be a platform for education where brands can come and advertise, and we don't want to even advertise direct products. So in fact, in the consultation paper that SEBI has just come out with, we are writing to them and we are explaining what our business models are, and we are asking them, to create a separate registration, which might be an adaptation of existing regulations, but it's more tailor-made so that it is properly, or it can accommodate our framework, and we have a clear idea of what's black and what's white. And instead of self-regulating, we have clear idea of what regulations or what rules we need to follow. So we do need separate registration for influencers because the existing registrations don't actually fit into our business models.
Anushka, thank you so much for joining us and giving us your thoughts on this subject, and all the best. You've been doing exceptionally well in this space of personal finance and financial literacy. All the best. Continue doing that. All right, let's take a short commercial break on Smart Money. Don't go anywhere. We'll be back in a bit.